Hello and welcome to Swag Academy. In this video, I will make an in-depth stock fundamental analysis of the company Meta. I will cover its history, business model, growth, balance sheet, profitability, and valuation. Meta was founded in 2004 by Mark Zuckerberg, who is still its current CEO. Its headquarters is in California, USA. The company has an $830 billion market cap. The stock is trading around $320 at the time I'm making this video. Meta Platforms is an American multinational technology company. The company owns and operates Facebook, Instagram, Threads, and WhatsApp, among other products and services. In addition to them, Meta also acquired Oculus, which it has integrated into Reality Labs. On October 28, 2021, the parent company of Facebook changed its name from Facebook to Meta Platforms to reflect its focus on building the metaverse. Meta Platforms primarily makes money by selling advertising space on its various social media platforms like Facebook and Instagram. Advertising sales are the primary source of Meta's revenue. While advertising provides Meta the majority of its revenue, it's not the company's sole income focus. Meta Reality Labs develops and offers Meta augmented and virtual reality hardware, software, and content. Augmented and virtual reality technologies are key to the company's plan of building out the virtual world called the metaverse. Meta competes with other companies to sell advertising to marketers, as well as companies that provide platforms for communicating and sharing content among users, various social networks. Major competitors include Apple, Alphabet, Google, YouTube, Tencent, Amazon, and Twitter. Meta grew its revenue from $7.8 billion in 2013 to $116.6 billion in 2022, around 15x in 10 years. Its number of family daily active people, in other words, the number of persons who visited the Meta family apps and products, has also been increasing steadily, reaching 3.07 billion users, almost half of the world's population. Meta's earning and free cash flow has also been growing from $1.14 per share to $7.14 per share. The free cash flow peaked in 2021, reaching $13.7 per share, then decreased to their current values. Yes, I prefer to do a per share analysis. It means nothing if a company increases its earnings while increasing the number of shares, thus diluting our profits as shareholders. So I do per share analysis. Now let's have a quick look at Meta's balance sheet. Meta has $69.5 billion in current assets. The current assets are the assets that are available to the company within 1 year. They include cash and short-term investments. The total current liabilities, which are the liabilities which the company must pay within 1 year. Meta's total current liabilities are $30 billion. Meta's total liabilities are $72.6 billion. The company could pay all its liabilities within 1 year. By calculating the current assets minus the current liabilities, Meta is left with $39.5 billion cash on its balance sheet, making the balance sheet extremely strong and healthy. Now let's check the efficiency of the company, in other words, analyze the operating costs. The cost for SG&A, meaning sales, general and administrative cost, is constant around 23%. The cost peaked in 2019 but then came back to their normal level afterwards. Meta announced that it will increase its efficiency in 2022 and 2023. As you can see in this chart, the cost of revenue for research and development as well as marketing and sales have been decreasing in 2022 and 2023, adding value to shareholders. Meta invests a lot of money in research and development. In this chart, you can see how much the company invested and the percentage of the investment related to the revenue. As you can see, the cost started increasing dramatically after Meta started working on the metaverse. Now let's check the profitability of the company. Meta's gross profit margin is around 80%. The gross profit is the result of revenue minus the direct cost to create this revenue. 80% is extremely high, but this is expected for a company with no production or manufacturing. It is clear that the gross profit margin is decreasing year after year. We will see how it develops in the future. Now let's check the operating profit and the operating profit margin. Operating profit is the net income derived from a company's core operation. Put another way, it is the amount of money that a company has left over after meeting its operating cost, but before paying its taxes. The operating profit for the year 2022 is $29 billion. It peaked in 2021, then decreased to its current value. This is probably the reason why the stock price dipped in this period. Now let's jump to valuations. Currently, Meta is trading at 37.5 PE ratio, a 15.3 price to free cash flow ratio, and a 6.18 price to book ratio. Pause the video and check how the current ratio compared to the previous years. Now let's do a discounted cash flow analysis to determine the fair value of the stock. This is how my model works. I calculate the worst case scenario to determine the downside, a normal case and the best case scenario. The first column represents the growth rate for the next 5 years. The second column represents the growth rate for the 5 years afterward. The third column represents the terminal value, or the PE multiple, at which the stock is sold. The fourth column represents the discount rate, or the rate of return the stock will grow over the years. Now I believe Meta will continue to grow, but not in percentile double digits number. I will consider a 10% growth for the first 5 years and 7% for the second 5 years. Yes, I prefer to stay conservative. The fair value of the stock should be around $190. I recommend buying Meta below intrinsic value. Currently the stock is trading around $320. I will not buy at this price, but will also not sell the shares I own. Meta is owned by various value investors. Here's a list of known value investors that own Meta. Pause the video and go through the list. Now let's discuss outlook and risks. As you can see in this chart, more and more people are spending more time on social media, and Meta has its share. The number of global social media users is continuously increasing and will continue to increase. The same goes for digital ad spend. Let's have a look at the number of downloaded apps worldwide. As you can see, WhatsApp, Facebook, Messenger, and Instagram belong to the top downloads. Nevertheless, Meta is facing risk from competition, especially TikTok. This chart analyzes the average time spent on social media in 2023. And as you can see, Meta is competing with TikTok, YouTube, and Twitter. Finally, the 3M analysis, 1M for moat, 1 for management, and 1 for margin of safety. Meta has a strong moat. It is a leading technology company in its domain and keeps improving over time. It has scale and network effect. Half of the world population uses Meta and Meta's apps. It has a high switching cost. If you follow hundreds of your friends on Facebook and Instagram, you will not switch to a new platform and start from zero. Now for management, they have been doing an amazing job growing and improving the company. Management have been buying shares of the company, increasing value for the shareholders. The number of shares have been decreasing, especially in 2022 and 2023. The management is also investing heavily in the metaverse. We will see how this develops in the future. Finally, for the margin of safety, Meta has been trading at a premium price and is currently overvalued. In conclusion, Meta is an amazing company with an amazing future. I recommend putting it on your watch list and waiting for a correction to buy the stock at a fair price.